guys, it's Carter. Welcome back to the channel. I hope you guys are all having a great and amazing day today. Now in today's video, this is going to be a beginner's guide for investing into the stock market for 2024. So I hope you guys all enjoy it, and if you guys do, hit that like button and subscribe. If you guys are new to the channel, my name is Carter and we talk about everything money, from stocks to money management to trading, investing. So subscribe and join the team. Also, exciting news, we just released a brand new swing trading course where we talk about strategies, how I trade, my mindset, how I find stocks. There's quizzes, live streams, and all that stuff. And I know when people think of courses, especially with YouTubers, they cringe, but I'm telling you, it's worth it. It's awesome. At least check it out. We're doing a holiday sale for the end of this month, so check it out down below. So guys, I hope you guys all enjoy this. Let's dive into it. All right, so with the new year approaching, I always think it's smart to go into the new year with some sort of game plan or strategy so we can make as much money as possible. As well as in 2024, there's going to be a lot of people that want to improve their finances. Some of your guys' New Year's resolutions could be to improve your money, and investing is a great way to grow your money as long as you understand some basic concepts. So like I mentioned, we're going to be talking about investing into the stock market. So what is the stock market? Well, in simple terms, the stock market in general is just a marketplace where stocks are bought and sold. But a stock, on the other hand, when you buy a stock, if that just say you buy a share of Coca-Cola, you're an owner of that company. You're a very, very small owner in Coca-Cola, which is awesome. It's amazing. For under $100, you can invest into one of the largest companies in the United States. The great thing about investing into individual stocks is if Coca-Cola makes a ton of money and they do really, really well, then the share price will go up. But if Coca-Cola doesn't do very well, then the share price will go down. Now, when a company makes so much money, they pay you. This is something called dividends. Dividends are a great way to grow your account and develop a passive income stream where pretty much you just invest and you don't have to manage it or worry about it, and you can get paid. Coca-Cola is a great example of this because it's a dividend king, meaning it's been paying a dividend and increasing that dividend for more than 50 years. But in simple terms, a stock is just a small ownership inside the company. Now you might be saying, Carter, okay, how do I invest into a stock? Well, you're going to need something called a brokerage. Now, I'm sure you've heard of companies like Robinhood, TD Ameritrade, Fidelity, Moomoo, all these fantastic brokers. Brokers give us, the average investor, a way to invest. They give us access to the stock market. Now, the great thing about using a brokerage nowadays is it's all online. You can do it on your phone, you can do it on a computer, which could be a great thing, but it also could be a bad thing. It makes it very, very easy to hop in that driver's seat and start trading and investing in the market. And if you don't know what you're doing, you can lose a ton of money. But don't worry, I got you. Now, when signing up with a brokerage, you're going to see several different account types, ranging from a standard broker's account all the way to different IRA accounts. Well, don't worry. The difference between a standard broker's account is there's no tax incentives, meaning when you make profit on that, you're going to be taxed at your tax rate. Compared to if you have a IRA account, now when you sell it and withdraw your money, if you're over the age of 65, there's a ton of tax benefits. Now, a Roth IRA, you don't get taxed when you withdraw the money if you're over the age of 65 because you pay the taxes in the beginning. Compared to a traditional IRA, you do get taxed when you withdraw, but you don't get taxed when putting it in. So honestly, personally, I always recommend the Roth because when you retire, you never want to worry about taxes. Now, when picking a brokerage, a lot of people don't know where to start. Well, I got you. So if you're just starting out and you don't know what to do, yeah, Robinhood is going to be just fine. They have a standard broker's account and they have IRA accounts. It's the best of both worlds. Now, if you're looking to do more trading, on the other hand, which is short-term price action gains, personally, I would recommend Moomoo, which just offers a standard broker's account. Now, the difference between trading and investing is very simple. Investing, you're holding that stock or investment for years. Trading, on the other hand, is all short-term price action. You're constantly buying and selling these stocks to make short-term profits to add as income that you could use for like a part-time gig. Don't forget to check out my swing trading course down below. The biggest recommendation that I would give you if you're looking to trade is just paper trade. Paper trading is using simulated money to develop a strategy and practice. You know, a lot of people see a lot of people making money online on YouTube, on Twitter, and honestly, the biggest thing is they make it very, very easy trading is far from easy. It's very, very complex, and that's why paper trading can help you practice and get an edge. Investing, on the other hand, is a lot more manageable because you can just invest into something and forget about it. All right, now that we kind of have a general idea of what stocks are, what good brokerage are, and pretty much just what the stock market is, now let's talk about the absolute best investment strategy that I would highly recommend going into 2024. So it's really simple. A lot of people love to overcomplicate investing. Well, in general, keeping your strategy and mindset as simple as can will make you a lot more money than constantly buying and selling. So here's the biggest tip. 1, open up a Roth IRA. If you're investing, I would highly recommend this because you care about long-term potential. This is going to be a retirement account, and the reason I love it is because when you retire, you're not going to have to pay any taxes on your profit. The great thing about this is if you make a lot of money, you don't have to pay taxes on it, and that's awesome. Now, yes, you do have to pay taxes on it in the beginning, but don't worry, it's not that big of a deal. All right, step number 2 is pick a brokerage that you like. Personally, yes, Robinhood works fine. Fidelity works fine. Honestly, just find one that you're comfortable using and you know how to navigate through the platform. Yes, like I said, Robinhood works fine. Make sure they have the account you want, like a Roth IRA or a traditional account. Now, once you sign up with your brokerage you want, the next step number 3, was click drip. Make sure you guys have the dividend reinvestment program turned on. The reason why this is so incredibly important for building long-term wealth, look at this chart here. You guys can clearly see the difference between reinvesting your dividends and not reinvesting your dividends. What this does is, if let's just say Coca-Cola pays you $100 in dividends, you're gonna take that $100 and you're gonna automatically invest it back into Coca-Cola. Now when they pay dividends, it may be $120. Then you're going to take that and reinvest it back into Coca-Cola. Now what happens is, instead of $120, it could be $200. And now you're starting the snowball effect where you're building more dividends, you're building more portfolio size, and you're constantly growing. It's like pushing a snowball down the hill. First, you got to pack it together. You got to build up that account. Then you got to push it. Once you start pushing it, you will realize it's getting easier and easier and easier, and it's getting bigger and bigger and bigger. Building an account is the exact same thing. Starting out, it's going to be a lot harder because you're just slowly getting profits, and then it'll start to compound on itself. Now you might be saying, Carter, what do I invest in? I'm so confused. Don't worry. Super simple. I would highly recommend investing into something called the S&P 500. The S&P 500 is a great way to invest for long-term wealth. This represents the top 500 companies in the United States. And the reason why this is honestly so awesome is because over the past 90 years, through all the ups, through all the downs, through the Great Depression, the dot-com bubble, the 2008 crash, it's got an average return rate of about 10%. Meaning, if you just invest and you forget about it, you're going to be getting, on average, about a 10% return. So as long as you don't sell your stock or your ETF or your shares, you're going to be just fine. On top of that, it pays dividends, so it will build up passive income, but you're going to be investing those dividends back into this, and it will slowly grow up more and more and more. Now, in order to invest into the S&P 500, you're going to need to invest into index funds and ETFs. These are just a great way to invest into a variety of different stocks all pooled together. Instead of spending thousands of dollars picking and choosing the top 500 companies and managing it and spending time and money on doing all that, they have a variety of fantastic ETFs that I would highly recommend. The top 2 I would recommend are VOO, VOO, this is backed by Vanguard, or ticker symbol SPY, which is just another fantastic one. And like I said, this represents the top 500 companies in the United States. So you're going to be investing into companies like Apple, Microsoft, Facebook, Amazon, Tesla, all these fantastic companies that I'm sure you and I use every single day. And you can use fraction shares with like Robinhood or Fidelity, where you can only just invest $1 or $5 or whatever you can afford into this. But another huge recommendation that I would highly recommend is starting as soon as possible. Look at this. If you are 25 years old and you invest $200 a month for 40 years, all the way till 65 years old, you're gonna retire getting a 10% return, which the S&P 500 has done. You're gonna have a total account size of about $1 million. Now, if you just wait 10 years, now you're 35 and you invest till you're 65 years old, you're only gonna retire with about $300,000, which is still a good amount of money, but it's not as good as 1 million. The biggest thing is starting as soon as you can, and I could not stress this enough. And if you have $1 million in your account with a Roth IRA, there's no there's no taxes on it. And if you have $1 million in your account and you're getting about a 3% dividend yield, you're going to be getting an income of about $30,000, which is incredible. That can pay your mortgage, pay your car bill, and just slowly build long-term wealth, which we all care about. Now, obviously, the more money you add into this account, the more money you're gonna make. So start as soon as you can and put as much money as you can. And the great thing about investing into the S&P 500 is it is a stock market index. A lot of people love to use the S&P 500 to get a general gauge of what the broad stock market is doing. So I'm sure you've heard terms, oh, the stock market is up 2%. They're virtually talking about the S&P 500, the Dow Jones, or the NASDAQ, which are all indexes. Now, one last reason why I love investing into the S&P 500 is because these so-called professionals, these hedge fund managers, can't even beat it. About 87% of hedge fund managers can't even beat the S&P 500. So honestly, just invest into the S&P 500 and forget about it. That's the best approach and the best strategy and mindset that I would recommend going into 2024 so you can make as much money as possible, guys. So I hope you guys all enjoyed this video. If you guys did, hit that like button and subscribe. And guys, this is all just my opinion, so do your own research before you guys invest. But we'll see you guys later. Don't forget to check out my swing trading course. I'll put it down below. It's fantastic and I would highly recommend it. So we'll see you guys later. Take care.